Good afternoon, ladies and gentlemen. It is Brendan from Market Makers, your home for Wyckoff and Advanced Fibonacci Pattern Trading TA. Guys, welcome to the show. Welcome to the new subs to our Discord. You can join our Discord, that little join button right underneath this video. Love to see you guys in a room. Professional traders, trade signals, most importantly, education to give you the techniques to get an edge in this market. We hit a milestone, 20,000 subs on YouTube, above 20,000 subs. So thank you guys so much for the love and support. Really appreciate the interaction you do on this channel. Again, I told you yesterday, 12 subs, less than a year ago, June of 2021. We had 12 subs, my 12 friends. Let's go ahead and jump into Bitcoin. The million-dollar question everybody wants an answer to. Did we hit a bottom? Is this a bottom? Well, look at how this pattern laid out. We had this target of 28.2. We initially struck the target, bounced up. That's when we were vacillating back and forth between 31 and 29. And then we fell. We wicked down below, almost hitting our 233. I did have the 23K target here for this wave projection. But the way this is shaping up now, I'm going to show you this in the other markets. The way this is shaping up, we'd be moving the A wave over to the candle. And that means if we can hold the base, your B wave is up, guys. We got to update these targets if this is the bottom. But you guys know the way that I trade. I tie this closely to the equities markets. So we need confluence. Let's look at Bitcoin on the daily first to see exactly where we hit. And if you look at this, the Gann fan line going back to the pandemic low. You see that? We struck this. I told you it's important to stay above it. We did fall below it, but we are back above it. We need to hold this trading range and make a mini cough type structure. What we'd be looking for here is if this is a selling climax candle, we need some blue candles, okay? Just like this. We need to establish a range here to see if we're going to base, break out to the upside, and pivot out, okay? That's what we need to see. Now, if we look at this on the SPX, do we have confluence? Look at the SPX. I mean, this is actually amazing. This is what I love about TA. Look where we fell. Of all the places we could fall, we fell right to the Gann fan. Got a nice demand wick. I like this on Bitcoin. I like this on the SPX, and we probably have it on the NASDAQ too. If we can hold this, this is the answer to your question. Let's look at the NASDAQ on a daily. Demand wick below, just like Bitcoin did, the Gann fan line, but we're holding above it. These are daily candles. We need more candles, but we got to hold this range. Remember, if the NASDAQ does fall, Bitcoin has been moving about a 2 to 2.3 beta this year to the NASDAQ. This is about a 7.5–8% fall drawdown to 11,000, which means Bitcoin could move 15–16% down if the NASDAQ does continue to decline. Very important to hold these trading ranges, okay? Let's go back to Bitcoin. So the long answer to a short question, this could very likely be the bottom if these other markets hold their bottoms. And the next step would be on the daily time frame to see moves up, okay? Let's get our projections to see exactly where we're at here, because now that we have this deeper dissension, we got to update some targets, give you guys some ideas of where we're at. First, let's look at the support in case things did fall apart, where they could go to. Now, if we go to the all-time high, down to your swing low here, up to your all-time high. You can see exactly where we struck. We laid this out yesterday here on the daily time frame. The 618, the most commonly retraced to fib at 25,950. You can see we wick just below it, right? So now that we have our support levels, the next level you'd have to watch if this did fall apart. I mean, you're starting to get down into the teens. You're at 19,891. Probably psychological factor, you'd probably hit 20K as well, right? But let's go ahead, let's go ahead and look at this for the upside projections to see exactly how our targets have changed, because we do have this deeper dissension. Let's go ahead and tag the swing low. Use your trend-based fib, guys. Go up to your swing high, down to the base of this candle. Now, remember, the three most important fibs you're going to focus on first are your 382 at 31,185, your 0.5 at 32.9, roughly 33K, your 618 at 34,798, right? Now, in Dow theory, these would be 33%, 50%, and 66%. Dow and Gann both wrote extensively about the importance of the 50%, okay? 50% moves the natural halving and doubling in the market. occurs quite often. If this is a weak rally out, you could be looking at that 33 as a potential top before a declination. It depends what these other markets do. If they truly do base, if they bottom out and they do decide to move up, that's what we want to watch. Now, if we can flip these three fibs, my target here is at 40K 645, okay? If we can flip them, we get up to 40K. That is the next key level. Take the market in segments. If you're trading this, look at the market in segments. First of all, we need to establish a range. Need some blue candles. Give us a ceiling. We have a base. Let's see how the candles react. If we're going to be accumulating for a while or if we're going to make a cup type fashion, this is what we would do. We need to break out to the upside of our trading range. If we can do that and pivot up, look at the market in segments. You got to flip key resistance points, okay? If we can flip those key resistance points, got to look at the one fib at 40,645. And then, of course, what has been the hang up here in the bear market? Your long-term moving averages, your 233 and 200. These will be descending towards price. Remember, price will always rise to resistance or fall to support. You will absolutely have to flip these. These are the health and welfare of the market. Remember, so that means for 200 days, price has been trading above and below, and this is the average. This tells you what type of market you're in, which is a bear market. Now, in bear markets, 47 of the 50 strongest up days happened in the bear markets for the equities markets, okay? So I expect some vicious rallies, which means crypto should react. Now, the question is, will crypto react less because it's considered a risk asset by the portfolio managers, the money managers, the hedge fund managers, or will it react more going back to that 2.0 beta that it typically reacts to on the NASDAQ? Time will tell. We don't know how long we have to accumulate. We don't know if this will be sharp or if this will be an extended period of time like it was here. But we shall see, guys. This is an important step, which is attempting to base. Very, very key step. And of course, if things got super bullish, 1618 is at 50K. Need to mention that. But in that case, you're flipping all of these moving averages on the daily, which would be very crucial. And you're flipping all the resistance levels. So we have to see how this plays out. Remember, the Fed will be raising interest rates again come June. So we have a compressed time frame for things to happen. This week's almost over. Next week, we'll see what happens. It is a fresh week for the markets. The bloodletting seems to be going up and down still in the equities markets, as you guys have seen. But if it can stabilize tomorrow and then go into next week fresh, who knows? It's a fresh week. We could see a rally in equities, which means we could see a rally in crypto as well. Let's look at some indicators while we're here, and I'll make this video short for you guys. Let's look at our volume. As you can see, a lot of big breakdown volume, high relative volume here on the candles. And of course, we have our distribution, just a red wave, but it does look like it's starting to base out a little bit, okay? And if we look at our volatility, by the way, if you guys do join the room, this is a indicator. It's a private script. One of our members, Fractal Trade 15, I use a lot of his indicators. You guys should check his TradingView page out. He designed this for our room. This is an ATR channel. It's a fantastic indicator. I do have a video on how to use it in our room, but this shows you your volatility, which is the separation of candles. I trade VTV, volatility trend volume, okay? So we hit a 4 sigma here on the ATR, which means this was a big move, okay? We need this to come back to neutral. What you're looking for as a volatility trader is to come back to neutral and get an explosive move. You can track this with the ATR as well, okay? But this is what you're looking for in the up direction. We don't want it in that direction. That would be very bad. So that's just something to look at as well. And let's go ahead and look at Ichi. Let's just check the cloud real quick while we're here. Throw that on. And there you go, guys. I mean, this, I know I show you this every day, but it's still getting fatter and it's descending. So this is the opportune time. You can punch through any size cloud. It just does make it more difficult. Like over here, you have a tendency to hit it, get rejected, hit it, and that's how you can make shapes like double tops. And then you have to come back and just reaccumulate and try again. So we'll see how this plays out. This, again, understand the market you're trading in, which is in a bear market. There will be big moves. Be patient. Be patient and you will find the trades that you are looking for, but rallies will always come. It's not always going to be doom and gloom. Hope you enjoyed this video, guys. Smash the like button, hit the subscribe button, and happy trading. Another video coming tomorrow. Take care, everybody.